Imagine a life where money isn't a constant worry. Picture yourself waking up each day with the freedom to choose how you spend your time, without the stress of financial constraints. Envision a future where you can focus on what truly matters to you, whether it's spending quality time with loved ones, traveling the world, or simply enjoying the peace of mind that comes with financial security. A life where you can retire comfortably, pursue your passions, and enjoy financial freedom. Imagine having the resources to explore new hobbies, take up new interests, and live life to the fullest without the constant worry of running out of money. This is not just a dream, it's a reality that can be achieved through smart financial planning and investing. This is the power of investing. Investing allows your money to work for you, growing over time and providing you with the financial stability you need to achieve your dreams. It's about making informed decisions and taking calculated risks to build a secure future. It's not just about making money, it's about securing your future. By investing wisely, you can create a financial cushion that will protect you and your loved ones from unexpected expenses and economic downturns. It's about having the peace of mind that comes with knowing you're prepared for whatever life throws your way. It's about taking control of your finances and building a brighter tomorrow. Setting clear financial goals and working towards them with discipline and consistency can transform your financial landscape. It's about making smart choices today that will benefit you in the future. Many people think investing is only for the wealthy. This simply isn't true. Investing is accessible to everyone, regardless of their financial background. With the right knowledge and tools, anyone can start investing and work towards financial independence. Investing is for everyone, regardless of income level. Whether you're a young professional just starting out, a middle-aged individual looking to grow your savings, or a retiree wanting to make the most of your nest egg, investing can help you achieve your financial goals. Whether you're starting with a small amount or a significant sum, the key is to start early and be consistent. Even small, regular investments can grow substantially over time, thanks to the power of compound interest. The earlier you start, the more time your money has to grow. Investing is a journey, not a sprint. It's about staying informed, making thoughtful decisions, and being patient. The market will have its ups and downs, but with a long-term perspective, you can weather the storms and come out ahead. It's about making smart decisions today that will pay off in the long run. Working with a financial advisor can help you create a personalized investment strategy that aligns with your goals and risk tolerance. It's about being proactive and taking charge of your financial future. Just like planting a seed and nurturing it over time, investing requires patience and discipline. You need to give your investments time to grow and mature. It's about nurturing your financial garden and watching it flourish. But the rewards are well worth it. The satisfaction of seeing your investments grow and knowing that you've secured your financial future is unparalleled. It's about achieving financial freedom and living the life you've always dreamed of. By investing wisely, you can grow your wealth exponentially, outpace inflation, and achieve your financial goals. It's about creating a legacy of financial stability and prosperity for yourself and your loved ones. The future you deserve is within reach, and it starts with making the right investment choices today. Think of investing as building a strong financial fortress. Each investment you make is like adding another brick to your fortress walls. Over time, these bricks accumulate, creating a solid foundation for your financial well-being. Just like a fortress protects its inhabitants from outside threats, your investment portfolio will act as a buffer against financial uncertainty. It will provide you with a safety net in times of need and empower you to pursue your dreams without financial constraints. Remember, building a fortress takes time and effort. You wouldn't expect to have a fully fortified castle overnight. Similarly, investing requires patience and a long-term perspective. Don't be discouraged by short-term market fluctuations or get-rich-quick schemes. Instead, focus on the bigger picture, creating a secure and prosperous future for yourself and your loved ones. Many people let money control their lives. They live paycheck to paycheck, constantly stressed about bills and expenses. Investing can help you break free from this cycle and take control of your finances. When you invest, your money works for you. Instead of sitting idle in a bank account, your investments have the potential to grow and generate passive income. This means you can earn money even while you sleep. Imagine the peace of mind that comes with knowing your money is working hard for you. No more worrying about every dollar, no more feeling trapped by your financial situation. Investing empowers you to live on your own terms and pursue your passions without financial limitations. It's time to stop letting money control your life and start making it work for you. The best time to plant a tree was 20 years ago. The second best time is today. This proverb rings true for investing. The sooner you start, the more time your money has to grow. Even if you can only invest a small amount each month, the power of compound interest will work its magic over time. Compound interest is like earning interest on your interest. It's a snowball effect that can lead to significant wealth accumulation over the long term. Don't wait for the perfect time to start investing. There's no such thing. The stock market will always have its ups and downs. The key is to start now and stay invested for the long haul. Remember, investing is a journey, and every journey starts with a single step. Today is the day to take that step and start building your path towards financial freedom. Investing can seem like a jungle at first. Don't worry, we'll break it down. Think of the investment world as a big marketplace. There are different things you can buy and sell to potentially make money. These are called asset classes. Each asset class has its own personality, its own risks, and its own rewards. Some are considered safer, like bonds. Others, like stocks, can be more volatile but offer the potential for higher returns over time. The key is to find the right mix of investments that match your goals, your risk tolerance, and your timeline. It's like putting together a puzzle. Each piece plays a role in creating the complete picture of your financial future. Remember, investing isn't about getting rich quick. It's a long-term game. It's about making smart decisions today that will benefit you for years to come. When you buy a stock, you're buying a small piece of ownership in a company. It's that simple. You become a shareholder. And as the company grows and hopefully prospers, the value of your stock can increase. Think of it like owning a tiny slice of your favorite pizza place. If the pizza place does well, your slice becomes more valuable. If it struggles, your slice might be worth less. Stocks can be volatile in the short term. The market can go up and down like a roller coaster. But over the long term, the stock market has historically trended upwards. That's why it's crucial to have a long-term perspective when investing in stocks. Don't panic sell when the market dips. Ride out the waves and stay focused on your long-term goals. Bonds are like loans you give to a company or the government. You lend them money, and they promise to pay you back with interest. Bonds are generally considered less risky than stocks because they offer a fixed rate of return. Think of it like lending money to a friend to buy a food truck. You agree on an interest rate and your friend makes regular payments until the loan is repaid. Bonds are a good way to add stability to your investment portfolio. They can help cushion the blow when the stock market is experiencing turbulence. However, because bonds are generally considered less risky, they also tend to offer lower returns than stocks over the long term. It's all about finding the right balance between risk and reward based on your individual circumstances and financial goals. Section 4, Mutual Funds, Strength in Numbers. Mutual funds are like baskets of stocks or bonds. Instead of buying individual stocks or bonds, you're investing in a diversified portfolio of assets managed by a professional fund manager. Think of it like going to a farmer's market and buying a pre-assembled basket of fresh produce. You get a variety of fruits and vegetables without having to pick each one individually. Mutual funds are a great option for beginners because they offer instant diversification. They allow you to invest in a broad range of assets with a single purchase. This helps spread your risk and potentially increase your chances of earning a positive return. However, it's important to do your research and choose mutual funds with a solid track record and low fees. Section 5, ETFs, like mutual funds, but different. Exchange-traded funds, or ETFs, are similar to mutual funds in that they offer instant diversification. However, ETFs trade on stock exchanges like individual stocks. This means their prices can fluctuate throughout the day. Think of ETFs as a more flexible version of mutual funds. You can buy and sell them throughout the trading day, giving you more control over your investments. ETFs also tend to have lower fees than mutual funds, making them an attractive option for cost-conscious investors. Like mutual funds, it's important to research and choose ETFs that align with your investment goals and risk tolerance. Remember, investing is like building a house. You need a strong foundation of knowledge to make informed decisions. Section 6. Real estate building wealth brick by brick. Real estate is another popular asset class that can help build wealth over time. When you invest in real estate, you're buying physical property such as a house, apartment building, or commercial property. Think of it like owning a rental property. You collect rent from tenants, which can provide a steady stream of passive income. Additionally, real estate can appreciate in value over time, potentially increasing your net worth. However, real estate investing requires a significant amount of capital and comes with its own set of risks, such as property taxes, maintenance costs, and the potential for vacancies. It's essential to carefully consider your financial situation and risk tolerance before investing in real estate. Ready to jump in? First, you need an investment account. Think of it like opening a bank account, but instead of storing cash, you're storing investments. There are different types of investment accounts, each with its own purpose. A brokerage account is like a one-stop shop for buying and selling stocks, bonds, and other investments. Retirement accounts, like 401ks and IRAs, offer tax advantages for long-term savings. It's important to understand the differences between these accounts and choose the ones that align with your financial goals. Opening an investment account is easy. Many brokerage firms offer online applications that can be completed in minutes. You'll need to provide some basic information, such as your social security number and employment history. Once your account is open, you can fund it by transferring money from your bank account. Then, you're ready to start investing. Now comes the fun part, choosing your investments. Remember the investment puzzle we talked about earlier? Now it's time to start putting the pieces together. For beginners, it's generally a good idea to start with low-cost index funds or ETFs. These investments offer instant diversification and are a great way to get exposure to a broad range of assets. As you gain more experience and knowledge, you can consider adding individual stocks or bonds to your portfolio. However, it's crucial to do your research and understand the risks involved before investing in individual securities. Remember, there's no one-size-fits-all approach to investing. The best investments for you will depend on your individual circumstances, risk tolerance, and financial goals. Investing isn't gambling. It's not about picking stocks based on gut feelings or hot tips. Successful investing requires knowledge and research. Before investing in any company, take the time to understand its business model, its financial health, and its competitive landscape. Read company reports, industry analyses, and financial news. Don't be afraid to ask questions and seek advice from financial professionals. Knowledge is power, and in the world of investing, knowledge can lead to informed decisions and potentially higher returns. Remember, investing is a marathon, not a sprint. It's about making smart, well-informed decisions that will benefit you over the long term. You've heard the saying, don't put all your eggs in one basket. This rings especially true in investing. Diversification is key to managing risk. Instead of putting all your money into a single stock or asset class, spread your investments across different sectors, industries, and asset types. This way, if one investment performs poorly, the others can help cushion the blow. Think of it like a balanced breakfast. You wouldn't eat just cereal every morning, would you? You'd want a mix of protein, carbohydrates, and healthy fats to fuel your body. Similarly, a diversified investment portfolio provides a balanced approach to managing risk and potentially maximizing returns. You don't need a fortune to start investing. In fact, starting small can be a great way to learn the ropes and gain confidence. Many brokerage firms allow you to invest with as little as $1. The important thing is to develop a consistent investing habit. Set aside a portion of your income each month, no matter how small, and invest it wisely. Over time, these small contributions can add up to significant wealth. Remember, investing is a journey, and every journey starts with a single step. Don't be afraid to start small and gradually increase your investment amount as your income grows. The stock market can be volatile. There will be ups and downs, bull markets and bear markets. The key is to stay the course and not panic when the market inevitably experiences turbulence. Remember, investing is a long-term game. Don't make rash decisions based on short-term market fluctuations. Stick to your investment plan, ride out the waves, and focus on your long-term goals. Think of it like sailing a ship. There will be storms and rough seas along the way. But with a steady hand on the wheel and a clear destination in mind, you can navigate through the challenges and reach your desired harbor. Investing is no different. Stay focused, be patient, and trust in the power of compound interest to work its magic over time. Learning from legends, Warren Buffett's wisdom. You want to be a successful investor? Learn from the best. Warren Buffett, the Oracle of Omaha, is a legend. He's built a fortune by investing in companies with a long-term perspective. Buffett's advice? Invest in what you understand. Don't get caught up in complex investments you don't grasp. He likes simple businesses with a competitive edge. Another key takeaway? Be patient. Buffett holds investments for years, sometimes decades. He doesn't panic when the market drops. He knows that over time, good companies tend to increase in value. Remember, you don't need to be a genius to invest successfully, but learning from those who are can give you a significant advantage in the market. One of Buffett's most famous quotes is, "Be fearful when others are greedy, and greedy when others are fearful." What does this mean for everyday investors? When the market is soaring and everyone is rushing to buy, be cautious. It's easy to get caught up in the excitement, but that's often when prices are inflated. Conversely, when the market is down, and people are selling in a panic, it can be a good time to look for bargains. Remember, you want to buy low and sell high. Buffett's approach is about being contrarian, going against the crowd. It's about thinking for yourself and not letting emotions dictate your investment decisions. Peter Lynch, another Wall Street legend, managed the Fidelity Magellan Fund to incredible success. His secret? Investing in what he knew. Lynch believed that everyday investors had an advantage. They could spot investment opportunities in their daily lives. Do you love a particular brand of coffee? Do you notice a local business booming? Those are the kinds of companies Lynch sought out. He believed that by understanding the products and services people used every day, he could identify companies with growth potential. Remember, investing doesn't have to be complicated. Look around you, observe consumer trends, and don't be afraid to invest in what you know. Section 4. The Magellan Fund's Success Story. Under Peter Lynch's management from 1977 to 1990, the Fidelity Magellan Fund achieved an average annual return of 29.2%. That's remarkable. How did he do it? Lynch focused on finding companies with strong growth prospects, regardless of their size or sector. He wasn't afraid to invest in small, unknown companies that he believed had the potential to become big winners. He also understood the importance of diversification, holding hundreds of stocks in the Magellan Fund. This reduced risk and allowed him to capitalize on growth opportunities across various industries. Lynch's success story demonstrates that with a keen eye for opportunity, a commitment to research, and a bit of patience, everyday investors can achieve extraordinary results. Section 5. Benjamin Graham, the father of value investing. Benjamin Graham, often called the father of value investing, was a mentor to Warren Buffett and a pioneer in the world of finance. His book, The Intelligent Investor, is still considered a must-read for any serious investor. Graham's approach to investing was grounded in finding undervalued companies, those trading below their intrinsic value. He believed the market often mispriced companies, creating opportunities for savvy investors to buy low and sell high. Graham emphasized the importance of margin of safety, buying stocks at a significant discount to their intrinsic value. This provided a cushion against potential losses and increased the likelihood of long-term gains. Section 6. Finding your margin of safety. Finding a margin of safety is like buying a car on sale. You're not paying full price, you're getting a discount. In investing, it's about finding companies trading below their true worth. How do you determine a company's intrinsic value? It involves analyzing its financial statements, understanding its industry, and assessing its future earnings potential. It's not an exact science, but by being diligent in your research and applying a conservative approach to valuation, you can uncover hidden gems in the market. Remember, investing with a margin of safety provides a buffer against uncertainty and increases your chances of long-term success. Just like buying that car on sale, you're getting more for your money. The balancing act: risk versus reward. Investing is like walking a tightrope. On one side is the potential for reward, the opportunity to grow your money and achieve financial freedom. On the other side is risk, the possibility of losing money and derailing your financial goals. Every investment carries some level of risk. It's the price you pay for the potential reward. Generally, the higher the potential return, the higher the risk. Conversely, investments with lower risk profiles tend to offer lower potential returns. Think of it like climbing a mountain. The higher you climb, the more breathtaking the view becomes. But the climb also gets steeper and more treacherous. You need to decide how much risk you're comfortable taking to reach your desired summit. Understanding your risk tolerance is crucial in investing. It's about finding the right balance between potential reward and your ability to stomach potential losses. Riding the roller coaster, navigating market volatility. The stock market can be an exhilarating yet daunting experience, much like a roller coaster ride. Understanding how to navigate through its highs and lows is crucial for any investor. The stock market is like a roller coaster. It can be thrilling and terrifying all at once. The key is to be prepared for the ride. It has its ups and downs, its twists and turns. These fluctuations are a natural part of the market's behavior, reflecting the ever-changing economic landscape. There will be times when the market soars to new heights, filling investors with excitement and optimism. These are the moments when it feels like everything is going right, and the future looks bright. And there will be times when the market plummets, leaving investors feeling anxious and uncertain. These downturns can be challenging, but they are also opportunities to reassess and strengthen your investment strategy. Market volatility is a natural part of investing. It's important to remember that these fluctuations are not only inevitable, but also necessary for the market's overall growth and health. It's driven by a multitude of factors, including economic data, geopolitical events, and investor sentiment. Each of these elements can cause significant shifts in the market, sometimes unexpectedly. The key is to not let emotions dictate your investment decisions during periods of volatility. Emotional reactions can lead to impulsive decisions that may not align with your long-term goals. Remember, investing is a long-term game. It's about patience and persistence, not quick wins. Staying focused on your long-term objectives can help you weather the storm. Just like riding a roller coaster, it's important to stay buckled in, keep your hands inside the car, and enjoy the ride. Embrace the journey with all its ups and downs. Don't panic and jump off at the first sign of turbulence. Reacting hastily to market drops can lead to missed opportunities and potential losses. By staying focused on your long-term goals and maintaining a disciplined investment approach, you can navigate market volatility and come out ahead in the end. Consistency and a clear strategy are your best allies in the unpredictable world of investing. Tim, your greatest ally in investing. If there's one secret weapon in the world of investing, it's time. The earlier you start investing, the more time your money has to grow. The power of compound interest, often called the eighth wonder of the world, can work its magic over time, turning small, consistent contributions into significant wealth. Think of it like planting a tree. The best time to plant a tree was 20 years ago. The second best time is today. The same principle applies to investing. The sooner you start, the more time your money has to grow and compound. Even if you can only invest a small amount each month, the key is to start now and be consistent. Don't underestimate the power of time and compound interest to work in your favor. As the saying goes, The best time to start was yesterday. The next best time is now. Investing is a marathon, not a sprint. It's not about getting rich quick or chasing the latest hot stock tip. It's about making smart, informed decisions, staying disciplined, and having a long-term perspective. Remember, building wealth takes time. There will be challenges along the way. The market will fluctuate. Life will throw curveballs. But by staying focused on your goals, maintaining a diversified portfolio, and riding out the inevitable ups and downs, you can cross the finish line and achieve financial success. Think of it like training for a marathon. It requires dedication, perseverance, and a willingness to push through discomfort. But the sense of accomplishment when you cross that finish line is unparalleled. Investing is no different. It's a journey that requires patience, discipline, and a belief in the power of long-term thinking. But the rewards, both financial and personal, are well worth the effort. We've covered a lot of ground, folks. From understanding the basics of financial markets to diving deep into the intricacies of various investment vehicles, you've been on a journey of financial enlightenment. From the basics of stocks and bonds, mutual funds and ETFs, to the more complex world of options and futures, you've gained a comprehensive understanding of how these instruments work. To the wisdom of investing legends like Warren Buffett and Peter Lynch, whose strategies and philosophies have stood the test of time and continue to guide investors worldwide, you've now got a solid foundation for your investing journey. This foundation is built on knowledge, discipline, and a long-term perspective, which are crucial for achieving financial success. Remember those fortress walls we talked about? They symbolize the financial security and stability that you are building for yourself and your loved ones. Each piece of knowledge you gain, each step you take, each investment decision you make, adds another brick to that financial security you're building. These bricks are not just financial assets. They represent your hard work, your dedication, and your commitment to a better future. You've learned that investing isn't just for the wealthy. It's for anyone who wants to take control of their financial destiny. It's about making informed decisions and taking calculated risks. It's for anyone who wants to take control of their financial destiny. It's about securing your future, one smart decision at a time. It's about securing your future, ensuring that you and your family can enjoy the fruits of your labor without constant financial stress. One smart decision at a time, you are paving the way for a more secure and prosperous future. It's about breaking free from the paycheck-to-paycheck cycle, liberating yourself from the constant worry about money, and building a life where financial freedom is within reach. And building a life where money isn't a constant worry. Imagine the peace of mind that comes with knowing you have a financial cushion to fall back on. Remember those feelings of stress and uncertainty about money? Those sleepless nights worrying about bills and unexpected expenses? Investing can help you overcome those feelings and replace them with confidence and peace of mind. It's about taking control and making your money work for you, and replace them with confidence and peace of mind. Imagine the freedom of knowing your money is working hard for you, growing steadily over time, even while you sleep. Imagine the freedom of knowing your money is working hard for you, growing steadily over time, even while you sleep. This is the power of investing, the power of taking charge of your financial future. Look, I know getting started can feel overwhelming, but remember those baby steps we talked about? You don't need a mountain of money to begin. Start small, stay consistent, and let the power of compound interest work its magic. Open that investment account you've been thinking about. Pick a low-cost index fund or ETF to get your feet wet. Set up automatic contributions from your paycheck, even if it's just a small amount to start. Every little bit counts. Remember, investing is a marathon, not a sprint. There will be ups and downs in the market. Don't panic when things get bumpy. Stay focused on your long-term goals and trust in the process. The best time to plant a tree was 20 years ago. The second best time is today. That proverb couldn't be truer for investing. Stop making excuses, stop putting it off. The future is being built right now, and every day you delay is a missed opportunity to grow your wealth. Don't wait for the perfect time to invest, there's no such thing. The market will always have its fluctuations. The key is to start now, and let time work its magic. Remember, the longer your money is invested, the more opportunity it has to grow exponentially. Think of it this way. Investing is like planting seeds for your future. The sooner you plant those seeds, the sooner they can take root, grow strong, and bear fruit. Don't let procrastination rob you of the abundant harvest you deserve. Investing is more than just numbers on a screen. It's about empowerment. It's about taking control of your financial future and creating a life of abundance and opportunity. It's about achieving your dreams, whether it's retiring early, buying your dream home, or leaving a legacy for your loved ones. Remember, investing is a journey, and like any journey, it's best enjoyed with a positive attitude and a thirst for knowledge. Keep learning, keep growing, and never stop exploring the world of investing. You've got this. Now go out there, take charge of your financial future, and embrace the